Alright, so this video is called Sales Returns. Two little words, but it's so painful, so ugly. There's a lot of transactions, there's a lot of accounts involved here. Because we're looking at the same kind of thing that we did with the cost of goods sold when we were actually selling something, but now we have to do everything backwards. That's why this video comes directly after our correcting entries video. So if you haven't watched the correcting entries video, it's probably a good idea to watch that, or at least refresh your memory on it if you haven't watched it for a little while, so you can jump straight into this as well. Let's look at a transaction and we can see how we go with it. Okay, so a dude returns $55 worth of defective stuff. So we sold him some stuff valued at $55 and he didn't like it. Maybe it was the wrong color and he's just given it back, or maybe it was broken, whatever. The cost price was $20. Now, before we get stuck into it, it's probably a good idea for you to imagine that this transaction has already occurred, just the other way. A dude got sold $55 worth of stuff. The cost price was $20. You already know how to do that transaction. So if you already know how to do that transaction, you should be able to do this transaction, because this transaction is just that transaction in reverse. Now, remember that when you've got like a sale or a sales return, it's two transactions in one. One transaction, and then a second transaction. Okay, so we have to deal with those two transactions separately. Let's deal with the first transaction first, figure out where everything fits here. Now, there are three accounts that come from this. Our guy returns $55 worth of defective stuff. We actually have an account called Sales Returns. Okay, we have an account called Sales Returns. Now, the other one that we're going to have is the GST clearing account. And the other account that we're going to have is bank. So let's go through these step by step and see what happens. Now, first of all, we've got to give the guy his money back. $55. Now, this is one of those easy ones. The GST clearing account, that's going to be $5. And the sales returns. Now, sales returns is a new account that you haven't seen before, but it's what we would call, I haven't left myself a lot of space here. Let's do it down here somewhere. Sales returns is what we call a negative revenue. Okay, it's a negative revenue. So sales revenue is a revenue, is a negative revenue. Okay, so it's opposite debit and credit for the sales returns. You guys figure it out. Okay, sales returns of $50, GST clearing account of $5, bank account of $5. Let's do our general journal. Date, particulars, debit, credit. Never do that. Never do that. Okay, obviously it's all happening on the 1st of the 7th. Now, the particulars of this. Now, let's figure this out. Our bank account, we're paying him, so our bank account's gone down. And that's the large amount, that's the 55. So the other ones have to go on the other side. You can figure it out a different way. I mean, we already said that sales returns is a negative revenue. Revenues are credits, so negative revenues are debits. Sales returns, $50. GST clearing account, $5. Bank, $55. And journalize it. Cash payment of sales return. Okay, and we're not finished because we've got to do the second transaction. The cost price was $20. So on the 1st of the 7th, two accounts were changed here. cost of goods sold, and the inventories. Now, whether these, for the purposes of our accounting, whether these inventories were defective or not, when they come back, they're still inventories to us. They might be broken inventories, but they're still inventories. So we're still going to assume that our inventories are going up by $20. And that means that our cost of goods sold has gone down by $20 because we've sort of unsold them. We've unsold them. So the cost of goods sold has flipped. Okay, so our inventories is a debit of $20 because our inventories have gone up because they came back into the business, and maybe if we're dodgy, we can sell them again. And the cost of goods sold has gone down. Remember, cost of goods sold is an expense account. Our expense account, which is a debit account, has gone down, so we have to credit it. And what should we say? Sales returns at cost price. Okay. Now, it's complicated. It's equally as complicated as a sales. This is just a sales return. Now, if you can do one, you can do the other. You just need to flip absolutely everything, which is why we talked about correcting entries earlier. Okay, that's sales returns. That's as complicated as it gets, fellas. Good luck with it. Make sure you're talking to me, and make sure you're checking your answers. There's no good thinking you've got that right. You have to know that you've got that right. Okay, that's sales returns, fellas. Thanks a lot. Good luck.